Now the markets, since the last one of these, you can see that they perform very, very well, particularly the resource sector. The gold price has held fairly steady in US dollar terms. In A dollars it's fallen because we've had a much stronger A dollar, but we've seen quite good performances out of the base metals over the few months, reflecting the Chinese restocking and a realisation that probably we're not going to see a rerun of the 30s, even though Wall Street economists and analysts are very much influenced by perhaps what's actually still happening in their banking system and their economy generally. But there's other places we should be looking. China clearly is growing very well. We've seen steel production exceed 600 million tonnes. It's a new record level over the last couple of months, so higher than the levels of 2008. And that's a great contrast with what's happening in the United States, where it's only running at about 55 million tonnes. So it's more than 10 times the size there in China at the moment, and it dwarfs whatever's happening in the United States. The performance of the stocks, really the base metal stocks, the things like the Mincors and the Independence Groups and the Kazara Zincs, all those have done very well at that mid-cap range. And what we're seeing also now is that some of the smaller stocks are starting to perform as people recognise that these things are really extremely cheap. They're coming off the floor, so we're seeing very good percentage rises. We should see a lot more of these things, particularly for the gold and base metal players. The iron ore sector has been also buoyed by the fact that iron ore shipments into China are at very high levels. They're record levels of imports into China, and the prices of iron ore are above the benchmark prices that were achieved and set earlier this year. So a lot of those little iron ore companies are positioning themselves quite well. In the coal sector, we see a parallel, an improvement there, and some mines are being reopened. We've still got the navies of ships sitting off the ports, all waiting to pick up on the coal, and the numbers that we're starting to see now for thermal coal demand going out 2 or 3 years are still quite substantial. We're looking at about 5% per annum over the next 2 to 3 years increase in seaborne trade, and most of that increase really has to come from Australia. So the Australian resource sector is looking quite good, and it's assisted by obviously the US equity market rallying. The driving force is obviously the very large level of liquidity, easy monetary conditions, and we're seeing the American dollar weaken as a result of the increase in supply of dollars. The American bond market weakening as a reflection of increases in the supply of bonds, and with the deficits continuing, $1.8 trillion or thereabouts for the next year or two. That's a lot of bonds that need to be rolled over and issued. So we must see lower bond prices, higher yields, and I think we're also going to see quite strong inflationary pressures picking up, particularly in the United States. That will come back and impact the gold price reasonably soon. I think the next 2 or 3 weeks will be the critical stage. However we look at it, the driving force of China, India, South America, Middle East, with a rising demand for raw materials, and that those monetary issues affecting the US and the UK as well, weakness in currencies, all those are just going to push money into the resource sector. We saw 10 years of commodity bull market from the December quarter 98 up until the big correction last year, but it should be seen as a correction. We saw the low in November 98 in terms of commodities and commodity stocks. They didn't participate in the new lows that we saw in March, and they look as if they've probably got another 5 to 6 years of bull market ahead of us. Sure, it's not going to be straight up. There'll be rocky bits, but it has been robust from here. I think it's going to be robust for a bit longer. Then we'll get some sort of correction of some sort, sector rotation, and then probably a very strong market again in probably early 2010. But I think most of 2009 will be good before we start getting that correction. But if the gold price does what I think it might do, we may in fact find that correction is really only a matter of rotation within the market, and gold sector and the speculatives should have a very good run up until Christmas.